So could the best overall opportunities be in smaller cap stocks? Let's ask the Trading Nation team. Matt Maley with Miller Tabak, Dennis Davitt with Harvest Volatility Management joining us. Matt, what do you think? I mean, Citigroup was making a comment about these 5 specific names that they liked because they were particularly underowned by mutual and hedge funds. Do you have a take on the broader smaller cap sector in general, which has done better than the Dow?
Well, I must admit I'm a little cautious on this for a couple of reasons. Longer term, it should work out well, but I'm a little concerned about, number one, how much Donald Trump's going to get passed and when it's going to be implemented. So I don't know that we're going to get the higher rates, or at least as quickly as a lot of people are looking for. Along with higher rates goes the higher dollar, and that's helpful to these domestically associated mid-cap and small-cap names. The other thing is that I'm worried about the Russell 2000, which is obviously a lot of small cap names, is over-owned. Those 5 names that Citigroup mentioned may be under-owned, so those could be still good to look at. But overall, the COT data shows that they have much higher, the speculators, the ones who are usually wrong, have the highest positions they've ever had. They've actually come down slightly in the last couple of weeks, but they're still higher than they were at any other time before right now. And, you know, too many people on one side of the boat. It's going to be hard for that group to outperform, at least over the intermediate term, over the next couple of months.
All right, there you go, Matt Maley. You know, and Dennis, maybe the options market agrees with Matt's sort of cautious view because the cost of insurance in the options market on smaller caps, isn't it higher than on the larger cap stocks?
Yeah, it is higher than larger cap stocks, and it should be higher than larger cap stocks. I mean, with embedded risk, and if you look to the price to earnings ratios of these larger cap stocks, they tend to be lower than the price to earnings ratio on smaller cap stocks. I will say, though, that spread in earnings from small cap stocks to big cap stocks is pretty narrow right now. And while they may be over-owned in the Russell, I think equities overall are under-owned in the marketplace right now. I think people are moving into equities. So like Matt mentioned, the broader base indexes can go a lot higher as people allocate more into equities across the whole band. The one thing I would look at is the VIX, and there's VIX across the Russell called the RXY. That is higher than the regular VIX, but we're at a basement level in the VIX. So you're talking about paying 3% above an already deeply discounted insurance rate. So our portfolio is longer stocks, but insuring them as we go along those stocks.
All right, good view there on the small cap stocks and the market in general. Dennis Davitt, Matt Maley, thank you both very much.
A strong dollar is often viewed as a net negative to the economy, but that's not always true. While export-driven companies will often struggle under a strong dollar because their products are less competitively priced abroad, consumers will benefit because imported products will be cheaper. And because the U.S. imports more than it exports, from an economic perspective, a strong dollar is an overall positive.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.